Greetings, everyone. This is RKrivo with our chart drill down for June 13th, 2016. Now, my objective in each of these chart drill down videos, as those of you probably know who visited this before, is simply to show you how I go about identifying the strongest trending pairs. Those currency pairs that are more likely, though not guaranteed, to turn into winning trades. Now, if you have any questions about any of the indicators I use on my charts or why they're set up the way they are, please refer to the May 11th, 2015 YouTube video. It's entitled Chart Tutorial for an explanation. And if you still have any questions, please feel free to email me at RKrivoFX@gmail.com. Now remember, these charting drill downs are for instructional purposes only. They're designed to show you how I identify the higher probability trading pairs, and any of the setups that I show you by no means guarantees that they're ultimately going to turn into a winning trade. Now remember, trading is all about probabilities, identifying a trading edge, something that we can exploit, that we see on our technical charts, and that provides us with a higher probability trading opportunity. And the more of those edges we can identify, the greater the likelihood is going to be that we'll be profitable at the end of a week, a month, a quarter, or a year. Now, with that, let's quickly go over our disclaimers, and they are right here. Significant levels of risk may not be suitable for all investors. Only trade with risk capital, and that's money that you can afford to lose. You will have losing trades, make no mistake about it. High degree of leverage, it can work for you as well as against you. And as I mentioned, the content that I provide here is informational, educational purposes only, and not intended as specific trading recommendations. Okay, now let's take a look at the charts. And as you may recall, if you've listened to these before, again, I use a strong, weak currency analysis to point in the direction of the pairs that are in the strongest trends, so I can kind of zero in on those with a relative amount of ease, and then look at other pairs if I deem that necessary. And should you want to know more about that strong, weak analysis, again, you can email me at RKrivoFX@gmail.com. Just put strong, weak analysis in the subject line. Now, the most recent strong, weak analysis that I did, which was about 30 minutes ago, indicated that the New Zealand dollar was the strongest currency and the pound was the weakest. So knowing that, that's going to be my first stop as I drill down the charts, look at the different pairs. So with that information, let's go to the pound New Zealand currency pair. And I'm going to have to switch here because I've got the Aussie USD up here. And here is the pound New Zealand. And the way I have my chart set up, multiple time frame analysis, weekly, daily, 4-hour, 1-hour chart. And for those of you that understand the Danchin channels and know that I use those, there's also explanations of the Danchin channels on the YouTube videos. What I see as I'm looking at the pound New Zealand pair is pound New Zealand currency has continued to take out the lower Danchin channel. Big retracement here, but didn't touch the upper channel. So we're still in an open sell scenario on both the weekly and on the daily charts. Those are my long-term charts. So based on that, I'm looking to enter into the trade short on a shorter time frame chart. In other words, I want to sell the pair. I'm looking for a selling opportunity on a shorter time frame chart, that being the 4-hour, the 1-hour. Now, as I go to the 4-hour here, let's expand that a little bit. I can see that the pair has gone through a relatively nice retracement right in through here, leaving a couple nice long wicks to the top, upper Danchin channels right here. So my entry or my entry alarm is going to be right at, I'd set an entry alarm at about, what is that, 1.9962, set up an entry alarm and then come back when that alarm goes off, come back to my main computer terminal or whatever it is you use to trade from, and then I would check the charts to see if the pound is weak across the board, the New Zealand dollar is still strong across the board, and then at that point I would make the determination if I would want to get into the trade short or selling it. And you know, based on everything that's happening on the charts, the answer as I see it right now, but I wouldn't get into the trade now, is that yes, I would want to sell the pair. The other thing that I look at here is on the weekly. Over here, this is where the price is right now at about 2.0160, excuse me. And as I go across to the left here, I see that the pair has an awful lot of room to run to the downside here. It's got about roughly 700 pips. So that's a trade I would be interested in. Now, keep in mind, just because the currency pair has the room to run doesn't mean it's going to do it. But it does have that option. It could fall unimpeded, relatively unimpeded on this weekly chart, 700 pips. So that's what I use to make my determination. Is the trade worth my while to get in the trade? Is there enough profit value, if you will, profit margin in the trade to warrant my shorting the pair? And in this case, the answer is obviously yes. Okay, let's take a look at another pair here. And let's take a look at the Aussie New Zealand. I went through these a little bit ahead of time and picked out, likely suspects here. And again, Donchian channel strategy. The pair is on the weekly chart ranging a little bit, but it broke out of the range and it took out the lower Donchian channel right here. And so we're in an open sell scenario on the weekly chart. It's continued to take out the lower channel on the daily chart. So we're in an open sell scenario again on the two longer term charts. So what I'm looking for on a shorter term chart, the hourly, which is set up nicely in this situation, and I'll tell you why it's set up nicely in a minute, I'm looking for selling opportunities. So price action has gone down. It ranged a little bit on this 1 hour chart. Didn't quite touch the upper Donchian channel, which is the ideal setup that I like to see for shorting, touching the upper Donchian channel, and then when it takes out the lower Donchian channel. But this is close enough. This is definitely close enough right here. So what I'd be looking for here is not to short it immediately. That's a different type of strategy. But I would wait until it takes out the lower Donchian channel. So I would set my price alarm again on this pair, maybe at 1.0409. Somewhere around in there, and that's about 70 some odd pips away. And I would set the price alarm, so I would come and take a look. Aussie still weak across the board, New Zealand dollar strong across the board. When that alarm hits, then I would contemplate going into the trade. And again, based on what I see on the longer term charts, I'd definitely be interested in doing that if things remain the same in the in the market. And again, I've got a lot of room to run here. Let's open up this weekly chart. Got a lot of room to run. Pair is trading right now right about this level. Once it starts to move down, this has got about 300 pips room to move. So I'm interested. And the slow stochastics is got good angle and separation. It's open to the downside, indicating there is the potential for more momentum to the downside, more bearish momentum on that particular chart. 4 hour chart, and the 4 hour chart especially, let's take a look at slow stochastics there. This is strong angle and separation to the upside. So it looks as though, based on slow stochastics on the 4 hour, that the pair has more upside momentum left in it, indicating there is that potential that price could move higher. Operative word being could. Doesn't mean it's going to, but that's the signal that I'm interpreting from slow stochastics. On the Euro-Aussie pair, I identified something that I'd like to show you, which is a little different than Donchian strategy, but something that I'm sure you're familiar with, and that's range trading. And forget the Donchian channels for a minute on this, but we can see, let's check for a minute here. We can see on the weekly chart, pair has been oscillating up and down and up and down, and it's been making lower highs, but not necessarily lower lows. Now, if I go to the 1 hour chart, which is what jumped out at me here for the range, let's take a look here. Let me outline this range for you so you can see it. What I'm looking at here, roughly. Let's just go. It's going to be a little bit loosely configured, but a range nonetheless. Okay. You see the triangle? Touches the upside of the triangle. Touches near the downside of the triangle. Touches the upside of the triangle. Here we had some wicks that reached down outside the triangle. That's fine. I base my candlestick reading assessment primarily on the bodies of the candles as opposed to the wicks. The idea here is the pair has been oscillating within this rectangle, hitting the high, hitting the low, hitting the high. When is it going to stop doing that? I have no idea. But we want to play that trade as long as that range holds up. Now, what I would do at this point, because every other time, 1, 2, 3 times, it's gotten near that upper extremity, if you will, at about 1.5300, the pair has turned around and gone to the downside. Is it going to do it again? Like I said, I don't know. But it demonstrates that historical trading scenario, if you will. So what a trader could do if they want to, if they would want to trade a range, is perhaps place an entry order maybe below this wick right here at about 152.71, or you could set a price alarm at that level. And then the stop would go above the top of the range. In other words, just above the highest point to which the pair has traded, which is about 153.02. So if price does in fact repeat what it's done roughly 3 times before, then we're in a short position on the Euro-Aussie pair, and we would place a limit order, a take profit, where to get out of the trade as it approaches that lower level of the rectangle. So in this case, it'd be about 70 pips, somewhere in that area. The good news is you have a potential of 72 pips profit with a potential loss where you're placing your stop at about 20 pips above. So you're risking 20 to gain 70, which is more than a 1-to-2 risk reward ratio. So again, if this plays out, that's great. If it doesn't, hey, those are the breaks. Every trade is not going to be a winner, but we're here to identify higher probability trades and something that presents us with a trading edge. Identifying a range like this and seeing it over an extended period of time. Let's see, this is a 1-hour chart. So how many hours would this be? This range has been going on roughly for 90 hours. So we know it's not just a couple hour type of thing. The range has proven itself a little bit. So if this is something that you want to take a look at, maybe trade it in a demo account. If you're not familiar with range trading, feel free to take a look at it. But if this introduces you to a newer type of trading strategy, range trading, fine. If you have any questions about range trading, email me at RKrivoFX@gmail.com, and I will be happy to give you some information about range trading. Now let's get rid of this triangle and take a look at one last pair here before our time runs out, which is the New Zealand US dollar. And in this situation, open buy on the weekly chart, taking out the upper channel, open buy on the daily chart. So I'm looking for opportunities to buy the pair. And again, this is back to Danchin channel strategy now. And in this situation, what I would be looking for is price to move up and take out the upper Danchin channel, which is currently at 1.7143. So that's where I would set a price alarm. Now, looking at slow stochastics, here it's got angle and separation to the downside because it's reflecting this move to the downside, that move to the downside. So we may have some more downside here, which is fine. It's not a race. It's just I'm waiting for my trading edge, my ideal setup. And according to Danchin channel strategy, that's going to be when the upper channel gets taken out, if it gets taken out. I go back and I check and see how much room to run do I have on the weekly chart. And I see here that we've got about 600 pips. There's all red candles. There's no resistance as it's moving up on that weekly chart, no hiccups. So it's got the room. Whether or not it does it, again, is an entirely different matter. So thanks for viewing the video. If you got any questions, RKrivoFX@gmail.com, and look forward to having you take part in another video. Have a good evening. Bye now.